Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Muralidhar Swaminathan and we are here to answer all your fund related queries. Joining me on this show is a new guest, Abhinav Angirish. He's not new to the industry. He's founder of InvestOnline and he has over 15 years of experience in private wealth, banking, you name it, anything in the financial services sector. Abhinav, welcome to the show.
Thank you, Muralidhar.
You must have seen the industry grow over the last 5-6 years. I think it's grown like tremendously now. The investors are also a little more mature compared to what they were earlier, right?
Well, yes, in fact, it's like the compounding effect, right? So having running this company for the last 14 years, the initial 4 or 5 years, the penetration was not as much, even if you see the industry AUM growing per se. So yes, last 4 or 5 years, there has been a lot of penetration, of course, from rural and the urban side. I think the industry also has been marketing itself well. There is a lot of support from the association. That's why you see these things like mutual funds sahi hai and those kind of promotions really happening. So yeah, it is reaching people, but I still feel we have a very long way to go. I think probably in the next 5 or 6 years, even if the industry grows 5 or 6 times more, I don't think that'll be very surprising, really.
Right. Okay. On that note, let's take the first query. Kumud Patel is on the line from Ahmedabad. Good afternoon, Kumudji. What's your query?
Good afternoon, sir. Thank you very much for BTV to giving me a chance.
Yes.
And I must congratulate that your team is giving excellent job for the service people like us.
Thank you.
I am Kumud Patel from Ahmedabad.
Yes, ma'am.
And I am a retired class 1 officer and yes. I want to start my mutual fund again because I was doing that before that. But since 2-3 years I have stopped that.
Right.
I want to invest 25 to 50,000 rupees per month. As I have selected few mutual fund, I can just sell and I just want to invest this money for my son, not for myself.
Right.
He is studying abroad.
Yeah.
And I like to do same thing.
Right.
So I have just given a few lists in that.
Right.
I can repeat that again also. HDFC small cap, L&T India Value Fund, Reliance Capital small cap, SBI Mutual mid cap blue chip, or frankly small cap or Primar.
Right.
I just want your expert advice for that, where I should go and continue that thing.
Right. Your objective is very clear. You want to give it to your son. How many years do you want to stay invested? 5 years, 10 years?
Till I am alive.
Okay. Very good objective. Abhinav, how do you want to?
Good to have such parents who actually donate so much of their money to the kids. See, I think what she's really done is she's shortlisted the schemes primarily, I think, just sorting it on the returns basis, what she's done. So naturally, she's picked up all these small cap companies which have done brilliantly well, the small cap funds rather,
right.
In the last few years. My point being, fine, she wants to gift it to her son. Is there a goal involved or just going to be pure gift?
I think it's a pure gift.
So in that case, see, if you're doing an SIP anyway, it's going to last for a longer period of time, then that's when it really makes sense, right? If the money is going to stay invested for 5, 10, 15 years, hopefully the SIP goes on as well for that period, the funds are fine. Again, you need to understand that in short term, you could be seeing that these funds do underperform because they are kind of high beta kind of funds always, and actually that's how the alpha comes out too. So she can invest in those as long as restricted to the time period. I think she's fine to go ahead with the schemes.
Right. Okay. You can go ahead with the schemes, Kumudji. Thanks for calling us. The next caller is Abhishek Chaturvedi. He is on the line from Delhi. Good afternoon, Abhishek. What's your query?
Very good afternoon to all of you. I'm Colonel Abhishek. I'm calling from Northeast.
Yeah.
First of all, thank you very much for addressing my question here.
Yes, sir.
Yeah. What I want to know is I'm putting around 25,000 rupees per month on SIPs.
Right.
And my present portfolio value is around 9 lakh rupees.
Okay.
Now the issue is I want all this money next year. Now considering all the volatility and the inputs they are there till the next year, what I want to know is should I take out all this money and park it in some debt fund or liquid fund, or should I continue here?
Right.
And second question is, if I have to continue, should I continue in these funds which I have mentioned to you? Thank you very much.
Right. Abhinav, over to you.
Okay, so absolutely, I think he's assessed it correctly. If your goal is to actually use these funds next year, then it's high time you get out of them and move into short-term funds. Right. Ideally, yes, an ultra short-term kind of low duration kind of a fund which you have now works well. What you can also do is probably look at 1-year FMPs if they're available, if you have that period.
Okay.
So 1-year FMPs now with the interest rates rising are still yielding far more returns than what a bank FD would. It's just that FMPs for a period of 1 year, less than 3 years, of course, will attract like taxation, but I think still will be better than the bank. Else, you can choose a fund like a Franklin low duration kind of a fund. It's a liquid scheme, and you can choose a dividend option this anyway because it's going to be for a period of 1 year. The funds are available in 24 hours. Makes sense to move out. I will definitely not recommend to add more money in this because the period is fixed. Even if it's 2 years, I would say take a call now.
Correct. Yeah.
So, in that case, he should exit, and the strategy is right to move to a debt or liquid fund.
Okay, right strategy to move to debt or liquid fund. On that note, let's take the next query. This is a mail from Mangesh. He's written, he's from Mumbai, and his query is, he has invested through SIP in Axis Long-Term Equity, HDFC Equity Fund, L&T Equity, Quantum Long-Term and Equity, and Reliance Growth Fund. He wants to know, should I hold on to these funds or switch?
Okay, see, so Axis Long-Term Equity anyway is an ELSS scheme, right? You're going to be stuck in for 3 years. I think generally what really happens is people don't realize that when they start an SIP from the first month for say 36 months per se as an example, each month individually actually eventually
becomes
matures
a 3 years
period, right? So actually a third year SIP will be free on the 6th year per se. On the other side, I think Quantum and Reliance Growth are schemes which have been consistently underperforming. I'm not saying performance will continue, but there is no sign of hope I'm seeing in these schemes, so I think it makes sense to exit. L&T Equity per se, which used to be erstwhile like Fidelity Equity, which they eventually took over, is an average scheme. He could probably continue it, but I would still say if he wants to, exit the other two schemes would make more sense.
Right.
Reliance 200 now is a Reliance large cap fund. It is no longer 200 scheme. So earlier being benchmarked with horizon of 200 schemes to invest, now it's with top 100. So it's going to become a much more conservative kind of a fund compared to the other one.
But safer.
But yes, safer.
Relatively.
But see, the point being, if you're doing an SIP anyway, you're buying on a monthly basis. So probably in his case, maybe buying 3 or 4 times in a year.
Correct.
Like a month. The might as well be in aggressive schemes. If you have a horizon of 5, 7, 10 years, what's the idea of being in conservative schemes? It doesn't make any sense.
Okay.
Even if markets are getting lower,
take a little more risk.
It's actually not a risk at all.
Not risk actually.
Because even if markets are going down, you're actually buying at all levels.
Yeah, you're buying at all levels and averaging the
See, so
cost.
this year from Jan to now, if mid caps, small caps are corrected on an index level 10 to 15%. That's not to individual script wise.
Right.
You're better off because you actually bought
them cheaper,
more units.
10 to 15%.
So maybe if not now, a year later or 2 years later, you'll eventually benefit with the purchases that you've done now. So I think
good time to actually average and buy.
Absolutely.
Okay, the next caller is on the line. Zidan is on the line from Valsad. Zidan, good afternoon. Thanks for calling us. What's your query?
Yes, my query is, I have to in future and in the time of 10 years, I have to start my own business. So actually, I can afford 15,000 SIP.
Okay.
I want my money invested around 10 days. So which one should I go for?
Okay, you want to invest 15,000 through SIP every month?
Every month, yes.
Okay. Abhinav, that's it.
So, again, I believe he's a first-time investor. I'm not going very aggressive with him because probably once he starts investing, we'll get to know how this scheme
and he wants to invest and accumulate for future business. He wants to start his own business.
Correct. So what I would recommend is still he's doing an SIP anyway. So the concept being that, if you're investing in an SIP, if you're putting money for 5 years, on an average, invest only for 2.5 years.
Correct.
So horizon is 7 to 10 years anyway. So he's good enough to be investing for a 5-year period. So I split his money into 3 parts. I would say you take a large cap, an aggressive large cap fund really per se, a mid cap and a multi cap scheme. Then that will probably help you to arrive to your goal of actually starting your own showroom and kind of a business he has. In the mid cap, choose the L&T mid cap fund. In the large cap, you could probably choose the Mira Asset India Equity Fund. In the multi cap scheme, you can look at the Motilal 35 scheme to invest.
3 recommendations very clearly.
Split these the money in these 3 equally.
Right. The next caller is Anuj Mishra. He's on the line from Mumbai. Good afternoon, Anuj. What's your query?
Good afternoon, sir.
Yeah.
Sir, I have an existing corpus of 10 lakh rupees, which is currently into the liquid mutual fund schemes.
Right.
My objective is to have a corpus of around 1 crore in around 12 years' time. I'm a very risk-averse investor.
Okay.
So just wanted your advice in which of the funds I could invest in. I can additionally put in an SIP of around 20,000 per month, in addition to the existing corpus I have.
Right. Okay. So I'll ask Abhinav to first explain how 1 crore corpus can be done over a period of 10 years before recommending these specific funds.
Okay, so
The principles involved, how to approach them, what will be the math?
sure. See, when you're typically investing in equities, you would ideally look at least 20-15% kind of returns. Else, no point being in equities, right?
Right.
So 12% is an average, very conservative kind of return, which
right.
you should get consistently. 15% is very fairly achievable. So it's a simple rule of 15, 15, 15, right?
Right.
So invest 15,000 for 15 years at 15% IRR, you will comfortably reach a goal of 1 crore in 15
crore,
years.
right.
But if it grows at 12%, it probably take 20 years to reach
20
1
years to
crore.
reach crore.
Where
Or you have to increase the amount.
Or you increase the amount.
Right.
Now, where I'm last year is he's saying he's risk averse. He's currently into liquid.
Yeah.
And he wants a 1 crore in 12 years, which is much faster than these. So probably have to be in an 18% kind of IRR situation.
Right.
So that's where it's a conflict really. And these are the situations where typically when markets correct during an SIP phase, also investors tend to stop their SIPs and probably relocate
Correct.
it and so on, which shouldn't really happen.
Right.
But yet, I mean, I think he has a decent amount of period to be invested. Firstly, liquid fund will not yield you nothing. Just
Right.
you're sitting with 5.5-6% kind of yields. If it's temporary, I think use the STP route and start moving this money out also. Or what you could anyway do if you're putting money for 12 years is that, split this money equally in the schemes which you'll eventually recommend now, and do the SIP in the same schemes as well. So it becomes like a base amount which you're putting in and then you're adding to it. Then I think comfortably 10-12 years he should be able to achieve as long as he continues consistently without any breaks.
Right.
So I would say go aggressive. Look at the Kotak Emerging Equity Scheme, the L&T Mid Cap, the Reliance Small Cap and SBI Small Cap Fund. Note I'm choosing only small caps because I have the time to invest. Split your dates of investment into SIPs on say on a weekly basis instead of just putting it all together on the 1st or the 10th of every month. This will completely average the market consistently. So whether you're buying a small cap will not matter because you'll be averaging on every single market level.
Right. Okay. I think the next query is Shiv Bajanka. He sent this mail. He is from Delhi. He is 37 years old and wants to start an SIP of 6,000 per month for the next 5 to 6 years. He has to repay a family loan of 8 lakhs. So the target is very clear. He has to repay a loan of 8 lakhs and 5 to 6 years, and he's given his age also. What's your recommendation? How do you?
See, I'm a little worried about this kind of a concept where you are accumulating monies on SIPs to eventually pay a loan.
Pay a loan, yeah.
My logic being, why not clear a loan first?
Yeah.
So assuming that you have an EMI running, let's assume that the EMI is 10,000 rupees right now. Increase that by 15,000, so your loan closes faster.
Loan closes faster.
I mean, what are we trying to achieve? Let's assume the loan is even as low as 10%, which if it's a housing loan kind of a concept,
housing loan,
right?
yeah.
And let's say your SIP yields you 12 to 15%. What is the gap you're really making? And what happens at the end of 6 years? What are the markets are not favoring you for whatever reason it may be, right? So might as well increase your EMI portion, make it to as much as you can right now. So because the period will decrease dramatically. 3 years later, you'll be free of any interest cost anyway.
Absolutely.
Right. So you're paying your EMI as well. You'll be putting in an SIP as well, and you're hoping for one to work in favor of you so that you can pay the other one off. Might as well clear one problem and then move to next.
Exactly.
So I think clear a loan first rather than in putting into SIP right now.
Yeah, unless it's a home loan. Home loan has got tax benefits. The net interest that they pay will be much smaller, isn't it?
It will be. See, but even home loans are running at 8.5-9% even now. Let's assume an 8.5% situation.
Yeah, 8.5%.
But he clearly mentions that he has to first clear his family loan. So I'm assuming, and the amount is about 8 lakhs. I don't think can be a home loan really. Not really. So it would be a personal loan or something like that.
Right. Yeah. Okay. The next query is from Chennai. We are getting queries from across India. Gayatri has sent us this mail. Her query is she has invested through SIP in Reliance Top 200, Franklin India High Growth Companies, and HDFC Small Cap Fund. She is a long-term investor. Her goal is to start a business, build a house for the long term. How long should she invest? Two objectives, business as well as building a house.
So both are going to be expensive proposals.
At least 10 years she should be invested.
I think 10 or even more for that matter. See, because compounding eventually goes much more, right?
Right.
So to just give an example on the same logic, like we were explaining earlier, how 15 works on a 1 crore situation. That same logic, if you from 1 crore, from 15 years move to 30 years, becomes 10 crores.
Right.
From the power of compounding per se, right? But naturally the patience level requires and discipline is too high and so on. So I can't recommend how long she should do it. Longer she does is better.
Yeah.
I don't know how long she wants to start a business and go on, but as long as it's 8-10 years away, it's fine. If it's shorter, then you need to reconsider what you're doing, because I don't know how long can she continue. If she has a fixed date in mind or stuff, all this stuff like that. The schemes are fine. What she's chosen, she's aggressive. She's one large cap. I'm assuming she's not investing a very large chunk in that. As long as the amount is small, it's fine. Otherwise, all the 3 schemes are good to go.
Right. All the 3 schemes are good to go. Be very clear with your objective and the discipline of investing regularly and making sure that you don't go for aggressive expectations. With that, I think we are running out of time. That's all we have in this edition of the Mutual Fund Guide. News and updates will continue on the other side. Keep watching.